So our viewer says that he is 34 years old and he started investing in stock market from September 2020. Till now he has invested 6.9 lakh in stock market, and he wants to invest 3 lakh as lump sum amount in Polycab, Sona BLW and Tata Communication. And he has also mentioned that he planned to stay invested in the stock for 15 to 20 years. So 15 to 20 years is a very good time horizon to get very good return from your portfolio. So now let's start. So the first share is LIC India. Number of quantity is 15 and currently it is down by around 19%. I personally don't like PSU companies because their first priority is customer service, people service, and profit generation. Shareholders' interest comes after that. So from an investor point of view, if you have invested in this company for growth in terms of capital gain, then I believe this may not be a right choice. But if you have invested in this company for dividend purpose, for safety purpose, then you can continue with this company. And one more thing is that this company is facing a lot of competition from the private sector, and the private player in the insurance sector are increasing at a rate of 18% CAGR. However, LIC premium are increasing at a rate of 9% CAGR. So this is also one important point to note. Next company is LTIMindtree. Number of quantity is 22 and currently it is down by around 5%. This is a good company from the IT sector, and the profit of this company are also increasing at a very good rate, and it belongs to a very renowned group as well, which is Larsen & Toubro. Currently this is the 5th largest IT company in India. You can definitely continue with this for long term. Next company is LTTS, again belonging to the Larsen & Toubro group. This company is also from the technology sector, but it's not a core IT company. This company provides engineering services, research and development services, and other digital solution services. So this you can say is a product IT based company, and LTIMindtree is a IT service provider company. So LTTS is also very good. It is also growing at a very healthy rate. You can continue to hold this for long term as well. Next company is Prince Pipe. Number of quantity is 195 and currently it is trading close to its buying price. This is a small cap company from the piping sector. This company has also shown good increase in the profit in the last couple of years. In the last few quarters, this company is struggling to keep its OPM percentage higher, because of which we are seeing this at a very good discount. But that's a temporary problem. You can continue to hold this company, but do keep monitoring its quarterly result. Next company is Reliance. Number of quantity is 16. Currently there is a profit of 24% on this company. This also is a good company. You can definitely continue to hold it for long term. Next company is Rolex Rings. It's not a company which makes Rolex watches. It's a different company which belongs to the auto ancillary sector. This also is a small cap company with a market cap of below 5,000 crores. It was recently listed in stock market, so we do not have much history about this company. I've checked its financial. The company is doing good in terms of its sales growth and profit growth, and the allocation also that you have done is very less, so you can continue to hold this company. Next company is Tata Chemical. Number of shares are 65. Currently there is a profit of 36% on this investment. So now I'm at the chart for Tata Chemical, and this company provided negative return in last 1 year, but in the period of 5 years this company has provided a very good run up and has provided a return of 207%. It started showing a very good up move after 2020, when there were a lot of talks about this company moving into the battery manufacturing for EV. But recently Tata Group confirmed that Tata Chemical has no plan to set up battery plant for EV. Since then the steam and the euphoria which we were seeing in this stock has come down. If you look at the sales growth for this company, the sales growth has not been consistent, you can see here, and similarly with the profit growth as well, this is also not consistent. You are seeing a good CAGR return because of that run up, because of which the CAGR for 10 years, 5 years and 3 years have also improved. In future, whether this company will be able to provide the same kind of return that it gave in the last 5 years, I seriously doubt that, because it's not consistent in terms of sales and profit. Instead of this stock, now I would have gone with a consistent compounder stock, which is consistent in terms of its growth of sales, profit and the returns as well. But these are my view. If you believe that Tata Chemical is going to do well in future as well, you may continue to hold that share. Next share is again from the Tata Group, which is Tata Steel. Number of quantity is 510 and currently there is a very good profit of 141% on this share. Now this is a company from the metal sector, and metal sector is very cyclical, and he was able to buy this company when it was at its low, because of which he is now seeing a very good return of 141%. But can this company continue to provide good returns in future as well? Let's check. So now I'm at the chart for Tata Steel, and you can see that this company in the period of 5 years has only provided 65% returns. So since the viewer was able to catch this share at its low, which was around here, he is getting a profit of 121%. But anyone who invested in this company 5 years ago only got the return of 65%. And if I look at maximum chart for this company, you will see that the returns are not that great. In the period of around 23 years, the company has only given a profit of 1612%. and you can see how volatile this sector is. So if you are able to time this sector, then you will earn good return on the company. But in case you end up buying at the top, then you will have to hold the share for a very long period of time to even get your amount back. Now for this company, since you bought it at a very low price and you are getting a good profit right now, in case if it goes further up, you will see good compounding happening in your stock. But there is also a possibility that it may come down as well, because this is how the metal sector behaves and have behaved earlier as well. So choice is completely on you whether you want to keep this share or if you want to book profit on this share and invest in a consistent compounder company which are available at good discount right now. Next company is TCS. Number of quantity is 4. Currently there is a profit of 20%. This is a market leader company, the number 2 company in the world in terms of IT services and number 1 in India. You can definitely continue to hold this share. It's a very good company. If you want, you can also add more quantity of this share. 3300 is also a good support level for this company, and if you are able to get this at around 3000, then again you can add more in this company. This company you can definitely hold for 15 to 20 years, and in that period it can give you very good returns. Next company is Union Bank, again a PSU company. My views are still the same on PSU. The number of stocks are 200 and the profit is 123%. So same is the case for this company as well. He was able to catch this company at a low rate, because of which he's seeing a profit of 123% right now. But if you'll see the return for this bank in the period of 5 years, you'll see that it has not provided any return in the period of 5 years. It has gone negative by 42%. And if you'll see the long-term chart pattern, this is completely opposite to what I recommend. I recommend companies whose chart pattern is going from bottom left to top right like this consistently. But this company you can see is going like this. So I would avoid this company for long term. But again, it is your choice for this company as well. If you want to continue, you can continue as well. If you think that the PSU bank are going to perform well in future, you can definitely continue to hold this share. But if I were you, I would have booked profit and would have moved to a different share. Next company is from the alcoholic beverages sector, and the company name is Associated Alcohols and Breweries. This is a micro cap company with a market cap of less than 1000 crores. And considering the size of the company, you have invested a good portion of your capital in this company. You seem to be having very good conviction on this company, and it can be because of the products that it is manufacturing and also the business that it is into. If you have invested in this company thinking that this is from the consumption sector and the population of India is still very young, hence the consumption of alcohol is going to increase, then you can continue with this company. But there is one important point to note in these type of company, which is that these type of company depends on policies as well. So sometimes there are policies which are not favorable to these companies, which may have an impact on their returns and the profit as well. But do keep a track on this company in terms of its quarterly numbers. Next company is Bajaj Finance. Number of quantity is 3 and the price is very good. It was bought at around 3800 level. Currently there is a profit of 51% that you are seeing on the invested amount. This is a market leader in the NBFC sector. It's a very good company. You can continue to hold this for long term as well. And in case you want to add more quantities, you can add more as well. Next company is from the chemical sector, which is Deepak Nitrate. Number of quantities are 39 and currently there is a loss of 1%. This also is a good company from the chemical sector. Deepak Nitrate is the leader in the sodium nitrate business. It has around 70% market share in sodium nitrate business. It's a good company. You can continue to hold it for long term. Next company is Devyani International. This is from the food and restaurant sector. Number of quantities are 132 and currently there is a loss of 11% on this share. This also is a good company from this sector. You can continue to hold this, but this also is a recently listed company, so do keep a track on its quarterly numbers as well. Next company is from the pharma industry, which is Divi's Lab. Number of quantities is 16 and currently it is up by 1.78%. The buying price is very good. You have bought it at its very strong support and it is also available at a very good discount from its top. It's a very good company, a leader in the API business. You can continue to hold this company as well. Next company is Hindustan Unilever from the FMCG sector. Number of stocks are 4 and currently there is a profit of close to 20% on this company. This also is a good company from the FMCG sector. This company will not provide you very exponential growth, but it will give you decent return with more safety. Next company is IDFC First Bank. Number of quantities are 138. Currently there is a profit of 36% on this stock and this was also bought at a very good level. If you want, you can continue with this company. Next share is Infosys, again from the IT sector. Number of quantity are 14 and currently there is a profit of 37% on this company. This company also is a good company. You can continue to hold this company for 15 to 20 years. Now coming back to the point that you mentioned, that you want to invest lump sum 3 lakh in Polycab, Sona BLW and Tata Communication. So Polycab in my view is a very good company, a market leader in the wire sector. You can definitely go with this company. Sona BLW is still a okay company if you want to play on the EV sector, because this company is engaged in manufacturing parts related to EV. But I have my doubts on Tata Communication. The reason is the sales and the profit for this company has not been consistent. And if you'll also look at the long-term chart pattern of this company, it has been almost flat. Only in the recent few years it has provided good returns. So I doubt whether this company will be able to provide you consistent return over the period of 15 to 20 years. Instead of this, I would have looked for opportunity to invest in other sectors, the market leader and consistent compounders of other sectors like paints, which you don't have currently in your portfolio. You can look at Asian Paint or Berger Paint. The adhesive sealant sector you do not have in your portfolio, you can look at Pidilite. In the bank sector, you have one private bank, which is IDFC First Bank, but I would have also gone with one of the market leader bank, either SDFC or ICICI Bank. Then from the FMCG sector, if you are looking for a high growth company which can provide you good returns in terms of capital gain, then you can look at VBL as well. This company also can provide you good return in the period of 15 to 20 years. But in case you want to stick with HUL only, you can continue that as well. That's also a very good company. As I've said earlier as well, if you're creating a portfolio for long term, then you should have maximum companies which are market leaders, which are consistent compounder companies in your portfolio, because those companies will continue to compound your portfolio safely and on regular basis. And then you can have some fast growing companies as well from other sectors which may or may not be the market leader also, but their profit growth percentage should be very high, because then only they will be able to provide you better return than the consistent compounders company. But maximum should always be consistent compounder companies and market leader in the portfolio. You already have few companies in your portfolio. You can think of adding more allocation to those companies so that your portfolio can grow tension free in the period of 15 to 20 years. These were all my views. Please do your own research before taking any decision of buying and selling a stock from your portfolio. So that's all in this video. We'll meet in the next video with some other information. Thank you.